Public versus private enterprises in Canada. 1. Public enterprises in Canada. Definition: a public enterprise is an organization whose shares or debt are traded on a public market, such as a stock exchange, or that holds assets in a fiduciary capacity for a broad group of outsiders. Key characteristics: ownership is dispersed among public shareholders. Shares are traded on recognized stock exchanges, e.g., TSX. Subject to extensive regulatory oversight. Must provide transparent financial disclosures. Accounting standards. Public enterprises in Canada must follow International Financial Reporting Standards, IFRS, as adopted by the Canadian Accounting Standards Board, ASPE. Examples: publicly traded corporations, e.g., banks, telecom companies. Crown corporations that issue public debt. Investment funds open to the general public. Bookkeeping implications. Complex reporting requirements. Strict internal controls. Detailed disclosures and audit requirements. Higher compliance and documentation standards. 2. Private enterprises in Canada. Definition: a private enterprise is a business that is not publicly traded and does not hold assets in a fiduciary capacity for the public. Key characteristics: owned by individuals, families, or small groups. Shares are not publicly traded. Less regulatory burden than public enterprises. Financial reporting primarily for owners, lenders, and CRA. Accounting standards. Private enterprises typically follow accounting standards for private enterprises, ASPE, which are simpler and more flexible than IFRS. Examples: small and medium-sized businesses. Family-owned corporations. Professional corporations, law, accounting, medical. Bookkeeping implications. Simplified financial statements. Fewer disclosure requirements. Greater use of cost-based accounting. Focus on tax compliance and management reporting. 3. Key differences at a glance. Area: public enterprises, private enterprises. Ownership: public shareholders, private individuals or groups. Accounting standards: IFRS, ASPE. Disclosure level: high, moderate to low. Regulatory oversight: extensive, limited. Complexity: high, lower. Primary users: investors, regulators, owners, lenders, CRA. 4. Why the distinction matters. Understanding whether a business is public or private is critical because it determines which accounting standards apply. The complexity of bookkeeping and reporting. Disclosure and audit requirements. Compliance obligations. For bookkeepers and accountants in Canada, applying the correct standards ensures accurate financial reporting and regulatory compliance.